Hey, what's up, everybody? This is the Relentless Traders Chat. This is me at Surreal Trades and my buddy here.
Yeah, Juan Gar 97. That's my Twitter tag.
We're both traders who recently began trading this past year in 2021, seriously, full time. Juan, were you trading full time in 2021, or did you come in midway
Uh,
through the year? I can't really remember.
yeah, so I actually got interested in the market somewhere around February. Started learning basic TA, technical analysis right around that time, and I don't think I really started trading seriously till about June of
Oh,
2021.
June. Okay,
hmm
summer. Yeah, and we were talking about it too when I first started around August of 2020 when I started getting into technicals more and taking courses and reading books. And we both kind of took to the market, I think, fairly quickly and the educational and the challenges that come with all that. And we pretty much traded pretty solidly, or I would say seriously, the back end of 2021 um, and kind of took to each other to like support each other. We had some pretty deep discussions too here in this little Discord that we have, and figured why not document that week to week and share that with others, and also for us to look back on and keep the entire journey in perspective too.
Yeah,
So that's kind of that's kind of the thoughts with this with this podcast. Um,
Yeah, for the most part, I think we decided to start this more as a journal for ourselves. The same reason we're in this chat in this Discord, personal Discord, on the daily for the most part.
yeah,
Um,
every day.
yeah, just 'cause we're not here to to say that we're professional trainers 'cause we're not. We're still learning. Um,
Striving to be, but yes, we're no
yes,
way
no, not
that caliber level of trader yet. But
no.
that's what we're both looking for, I think, and striving for every day.
100%. And I think a very good, method used by both professionals and non-professionals alike is journaling. And that's what we've been doing for, the past couple months seriously. And
Yep.
that's why we started this chat, this podcast, because I think this would be a great idea to go back and look at in the coming months and years and see the progression that we've made. And hopefully at some point we can, help some people out in the future, if they're struggling through their journey as well. Because I mean, we've had our fair share of struggles just in this half
And we
year of
have a
trading.
lot more, yeah, ahead of us too.
Oh yeah, 100%.
Yeah, it's
So
definitely an interesting media too, I think. Another form of just not having just a actual physical ink journal at my desk, like we both have talked about and done, but also the actual recording of a trading journal online, where we upload our trades. And then it's kind of like interesting that we are also utilizing this form of media as well, on top of like what you said, hopefully, being able to look back on these and really keep the journey in, the full view of things. And also, it's kind of nice to be able to help others where we're at now to kind of see us having our discussions in real time, week to week, and seeing the raw, true struggles and progresses, I think is going to be really interesting too and beneficial to us and others.
yeah, 100%. I think we have already seen the power of what the ink journals and what consistently looking back on our trading journey has done just in the past couple of weeks,
Hmm.
2 months or whatnot. And I think it's gonna be a huge game changer to go back and hear just these podcasts and
Yeah. And the accountability too,
100%.
week to week, being completely honest.
Yeah. We can go ahead and we're gonna go ahead and introduce ourselves, kind of background on ourselves and the styles of trading that we do, because they're very different. We don't copy off of each other's trades. We don't, we definitely and we're always challenging ourselves in here. It's
Yeah.
always how can we get better? How can we, how each other? How can we help each other
Yeah.
achieve our goals, even if our styles of trading are different? Because ultimately, at the end of the day, what we want is the ability to trade at a professional level, and we know
Yeah.
that's going to require a lot of skill and a lot of dedication to get to that point. And we're in it for the grind.
Yeah,
Um,
for sure.
so if Sir Real wants to get into who he is,
Yeah. Okay, yeah, I guess we'll do introductions now. My Twitter handle is at surreal_trades. I began in the market, I would say, in 2016, not anything serious, just more so dabbling in the market, mainly equities. And, made every mistake in the book that everyone else mostly starts out with, dabbling in penny stocks, staring at price quotes, perusing StockTwits. I wasn't even aware of FinTwit back then, even if it was a thing. Um, and I was just, following, others would say, I was letting myself get caught up in stories and not even understanding uh, that there were other methods to tackling the market. So just essentially as just inexperienced and uneducated as as anyone can be. And I blew up two accounts from 2016 to when I finally lost more money in around 2020. And they weren't anything huge. It was, $12,000 roughly that I probably lost between those two accounts. Not life changing. It may sound like a lot to some people, but it wasn't anything that was affecting my life, even though it was greatly painful to me because it was a lot of money to me to lose. And finally, I just had enough. I was tired of staring at a price quote. I was tired of not feeling in control. And so I started to look for education. I said, well, this isn't working. So let me look into technicals, because I knew nothing about technicals. And I paid a lot of money. I paid a lot of money for a course. And it wasn't a scam, I would say, but it didn't align with my beliefs about the market and how the market had moved. And so I was trying to fit a square in a circle hole, right? It wasn't aligning with my personality and what I think about the markets. Essentially, the course was teaching Elliott wave theory, which is counting waves and this theory that stocks, move in these predictable waves, and they're not always, they're not every stock will move in this sort of predicted wave count, and there's variations of the wave count, and so it can become very subjective. It was the perfect sales tactic. Even though it may have worked for the trader or traders that were running that education source, and they may have been making money with it. I traded that method for several months, and I was very diligent about, they were talking about putting in the work and doing the studying and trading and being disciplined and all these things. And so it didn't align with my personality. I'm not the type of person that can trade subjectivity, even though that's what, a lot of speculation is. It's interpreting subjectivity within the market, repeatable patterns or whatever method you're using, an indicator, and exploiting that through, probabilities over time. Well, this was just too subjective for me, and it was really really depressing to consistently lose money trying to trade a method that I was, that just didn't align to me. So through educating myself and reading books and more books and more books and more books and trying this method for several months from around August 2020, that last end of 2020, I started to find myself trying different things from the books that I was reading of Mark Minervini and Stan Weinstein and William O'Neill, How to Make Money in Stocks, and learning about growth stocks because, those were the stocks that were moving, and everybody, when you buy a stock, you want it to go up. So I found myself aligning with those sort of approaches to the market, which is something that was concrete and repeatable, and that I myself was seeing late in the late cycle of 2020 after these, stocks like Neo and CLSK and all these like SPCE and all these crazy story stocks, that may have not had the earnings to back things up, but I could see them cycling through their uptrends, their stage two uptrends, and how Minervini and these other traders in the books that I was reading were exploiting these. And I was using these other methods of like Elliott wave theory and, trend line breaks and these other things, and it just was too subjective. There was no concrete repetition. But from the books that I had been reading, I was seeing that, and other traders that I was following um, online that traded growth stocks and kind of the methods they use. So I started to align myself more with that type of trading heading into 2021, even though it was a very vague picture. I was still dabbling in futures day trading. I was, trying to be a swing trader. I was day trading equities. I was trying a lot of different things with different methods. I was trading base breakouts on stocks, um, trying to swing trade them in not so good of market conditions in early 2021. And there were a lot of lessons learned there. But really, it was just me kind of fumbling from August of 2020 through that beginning year of 2021, trying multiple different methods, multiple different instruments, future stocks, things of that nature, and different time frames too, trading within those, day trading, trying to swing trade, trying to go long, trying to go short, trading breakouts, trading pullbacks, trading, bottom breaks, formations, things of that nature, and really just kind of all over the place, which, you don't know until you really get enough results and then look back and can learn. So that's kind of how I spent the first, I would say, 6, 7 months of 2021, was really just randomness, just random trading. But I was tracking everything for the most part. I hadn't started an ink journal just quite yet, and I had some Excel sheets that I had created myself to try and track my trades and do a trade journal, not an actual like physical ink journal, but a trade journal. I was still trying to create myself. I was trying to do a lot from scratch. And so I kind of just stumbled along doing these random trades, and I would get a winner, and then I would get a couple losers, and then I would get like maybe a big winner, a big lucky winner. And I was always after something tangible and consistent within a strategy. And so essentially, I'm glad that I tried all those things, and I'm glad that I, really put effort into like trying to learn something. But there's a fine line when you're new where it's, am I really putting all the effort into this type of strategy, or am I just trying to do this one thing until it's working out, and then when it stops working, then I throw it to the side? And I think there's a really fine line in there, and I'm glad I tried different things, but a lot of fear, a lot of doubt, a lot of uncertainty comes from, uncertainty itself, not knowing, you're going down this path of trying to commit yourself to a setup or a strategy. If you can even understand that you have to do that, right? That you have to understand you have to focus on something, and then you have to understand that you have to give it enough time to see it through a good market cycle and a bad market cycle. Asking a new trader to do that is very, for them to comprehend that, it's very difficult. And so unknowingly, that was me going through that August 2020 through the first half of 2021, was me figuring out all these different things. And so eventually I kind of drifted more to the style of how I wanted. I had an idea, after a couple months in early in 2021, I was getting some success trading, a stock moves up and then it creates a base and then it breaks out, right? That's the idea of how stocks move through uptrends. And I was trading those kind of Markman or Vinny base, the stock bases, and then you look for a tight area and then it breaks out and you try and, you buy the breakout. And so I was kind of leaning to more that made sense to me. Stocks, go up. I like being long, just like a lot of newer traders do, and that's typically what people gravitate to is that kind of style. But well, I was aware of that, and so I try to do more of that. But when a lot of people noticed in March and April the breakouts weren't really following through, and when you're a new trader and you don't know what a breakout should do or what it should look like, and you're trading those, and you're like, well, I worked so hard to get this entry right, I want to squeeze every bit of profit out of this breakout. And so I was still doing random stuff with futures and day trading too, but at least I was trying to give some effort into this swing trading method, and I was getting a lot of the breakouts. I wouldn't say a lot, but I was focusing more on it through that time period around February, and I was getting some success, and I had ran my count up a good 30-40%. My account's not huge. I started with about 5,000 in August, or January, actually, January 2021. I started with about $5,600. That's what I started the year with. And so I had ran it up to like 8 grand or something like that. And up until February. So the market was really good. But that was with me doing random stuff, trying to be a day trader on futures, trying to find myself in the market, trying to find a strategy. Um, and so I was just still all over the place, but I was able to run the account up a decent amount early because it was a good market. It was a forgiving market. I would take a breakout and I would hold it for too long, and because I'm sure as a lot of breakout traders know, there wasn't much follow through the majority of the year. And so here's me getting a nice 8%, 10% gain on a breakout, or a 15% gain, roughly in those numbers, and I would just sit there and hold it, and I would let it come all the way back into past my entry and stop me out. And so there was a lot of doubt and uncertainty that crept in with, like, can I do this? Is it even possible to make money in the market? Is this even real? Like, is this just gambling? And a lot of that uncertainty comes from not having the experience and the focus on a repeatable, consistent process. And that's what my end of the year, kind of where I ended up at the end of 2021, was, it's not about the money. It's about focusing, even with your goals. It's good to set big, lofty goals, percentage wise or dollar value wise. Like, that's great to be ambitious. But at the end of the day, saying, I want to be a 7-figure trader, and then me running into the market, doing random stuff, running all over the place, how is that going to get me to that goal? And so fumbling and continuously persevering and pushing every day. And I even I think, Juan, I took a break in August. I had to cut trading for a little bit because I drew down.
Yeah.
Uh,
Yeah, I
I
remember.
drew down. Yeah, and I had a tough time giving some of that money back from March and April, and I kept digging into that hole and doing the typical, um, I guess, revenge trading. I had a pattern of, when swing trading would go bad for me, I would run to futures. And that was an interesting pattern in my end of year review, is that whenever the market would go sour for growth stocks, or breakouts in general, and things just weren't following through, and I would get kind of down in the dumps about it, because I wanted action. So I found this pattern in my trade journal at the end of the year where I would run to futures to get the action. I would run back and day trade futures, the indexes, ES or NQ, and or I would be like, oh, I think the market's going to correct here. And I'm going to try and swing. I'm going to try and short futures and swing it, for a couple days or a week, swing the correction. And one of the worst things happened. I actually made money on it when I shorted the Nasdaq on futures with a small account too, which is pretty crazy. The only thing that kept me alive in 2021 was risk management alone, and a good understanding of that. That kept me alive long enough to make it to the end of the year and learn all these lessons and figure out what is my style, what aligns. When you hear people say you have to identify your beliefs about the market, well, that, to me, I didn't understand, that when I first read it at the beginning of the year, and a lot of these books I read, what that means. And essentially what it means is, if you're trying out a strategy, no matter what the strategy is, if other traders are doing it successful, that's great. Like, that's kind of proving the viability of that certain strategy, right? Like when I was trying Elliott Wave at the beginning, there were other traders that took that course that I took and were instantly successful with it. And I'm a very certain person, and so with something very, very subjective as Elliott Wave, and very, there's not, like, it's, anyone can look at it, and 10 people could have different wave counts. It just, even though other people are being successful, I was looking at myself like, well, why can't I get this? Why doesn't it work for me? And that's what really the aligning your beliefs with the market with your strategy means, is that, yes, there may be all these different variables in the market, and people use different, they pick and choose these different variables, and then they use them to tell them when to take a trade. Well, at the end of the day, majority of the time, people are trading the same methods, no matter what the fancy indicator or name is. They're trading breakouts, they're trading pullbacks, they're trading mean reversion. It's the same strategies. It's just they have different ways of getting to the end result, which is finding a low risk entry, putting the probabilities on your side for the direction, and then manage risk around it, and then just do that over and over and over again. And so you just have to find something that feels right to you. It's comfortable. It makes sense to you. You see it in the market. You see the market move in that way. And that to me is like the most important thing, in terms of a strategy and aligning it with your personality, like with risk management and things like that. Not in a sense of the most important thing in the market, but in terms of finding a strategy that, fits you. And so that to me was, I landed on, I want to be a swing trader. I like I like the tolerance of, how I can manage risk. I like the length of time. I It just fits me. It suits me. It suits my risk tolerance. It suits my time period that I want to look for. I want to look for good size moves. I want to know if I'm right away. If I'm wrong, I want to stop out quickly for a small loss, and that's okay, and move on to the next trade, or watch that setup to see if it's going to set up again and give me another chance to get in, because I don't mind taking, multiple shots at a stock anymore. At first I would, there were a lot of big trades in 2021, even on futures. We've talked about this one, the lumber trade when lumber was going
Yep,
crazy,
I remember that
and
one
that
too.
one, yeah, and that one really hurt. I heard a fundamental idea, and I went and looked at lumber futures, and they were setting, a big basing pattern up, and I was still kind of questioning, that thought process, and I was ready to take the trade. It would have been way out of my expertise. I don't think I would have been able to actually execute the trade to the fullest extent, but it would have been a huge, huge six-figure winner for sure on a small $11,000, bet. But that's the kind of idea I like in terms of equities alone, and I kind of landed on that after the first half of the year was over with, and I took that little break in August, digging myself into that drawdown, a big 30% drawdown. I drew the account from an $8,000 high, from like February-ish, and then from March-ish, March, April-ish to about July, I just drew the account from 8,000 down to 3,900, and I was just so like down. I was like, I've tried all these things. I'm like putting in, like, every day I'm reading books, every day I'm watching the market. I was working really hard. Not as hard as I've worked recently, but I was working really hard. I felt like at the time, putting a lot of work in and not getting consistent results. And well, when I look back, it's like, well, I was doing 10 different things, all these different strategies, all these different instruments, and it's easy to see why, I ended up where I was. But I had an idea at that point. July I had to take a break from, I have an actual real 9 to 5 job that I work, but I put a lot of time into trading, and I'm able to trade, the mornings and babysit positions and things of that nature. And so, um, I found myself in swing trading, and I came back in September, and I had a better idea of setups that I wanted to focus on, and like how I wanted to trade. And I was thinking about taking another course and spending a lot of money on that, and draining what was left of my account to take that course, because I felt like I need more education. And me and Juan kind of talked about it, and he kind of, told me, what'd you tell me? You said that you think I should just keep trading, and
Yeah, I
I
thought
can't
that.
remember
Yeah,
exact.
I thought like the experience, that on-screen experience would probably be more important. The course, the course was is based on books that you've already read. So,
Right.
I think the course was just gonna be a compact version of that. Just like add-ons, basically, as if you were just getting an expanded version of that book.
Of the books.
Yeah,
Yeah.
so I thought it was very, very pertinent for you to like continue trading because, the screen experience is also key to success, in my
Yeah.
opinion. So,
And when I came back in September too, because I was having a lot of stress with my actual real job, and I was trying to reorganize that aspect in my life, and kind of I was trying to get to a different position with less stress because I really do love trading and I really do feel like it's my calling. But at the end of the day, it's not, it's not, it didn't make sense for me to step away from my real job with, a small account and all that. So I was having to reorganize my real work to fit it around trading because I want to be a professional trader, not necessarily for a prop firm or an institution or something like that, but for myself, a fully sustainable trader. 5, 10 years from now, I want to be doing that full time when I'm able to retire and step away from this job that I've been doing for a while. So there was a lot of stress going on with that during this year too, and so it was just a lot. It was a really hard year. But I came back in September and I started swing trading and focusing on that, and I found like we hit a really good pocket in the market for some growth stocks, and we got some big moves. And I brought the account back from
You
negative,
doubled it. You doubled the account
yeah,
from the lows.
yeah, from negative 31, 32% or something like that. I got it back up to like 8,000 or something like that. So it was like a 90% gain from September to around November-ish time. And I was still finding myself, and I think people are always kind of doing that to some extent after until they really get their legs a couple years in and find like you refine it down to like you just keep narrowing your focus down on your strategy and on your setup. And and that for me is kind of was that tipping point. I was like, oh my gosh, like I thought I was dead in the water and I was kind of like being really tough on myself and on top of external, stressors that were, pushing on me and me putting this unrealistic pressure of being a 7-figure trader within like a year or two, with a less than a $10,000 account. Um, it kind of put things in perspective. And so, yeah, I stuck with it through September, October, November were good, great months. It was very busy trying to just identify good setups for swing trades, kind of identifying like what my setups were going to be, and like what I wanted to focus on trading. And so I guess we kind of can just discuss that real quick. I've kind of narrowed it down at the end of this year to three main setups that I kind of want to trade, and they're all swing trading setups, swing trading equities, main focus. And I got these from other traders. I didn't, invent these. I think a lot of people think they have to come up with their own thing in the market. And if someone else is doing something successful and they've already done a lot of the work, why spend a lot of time reinventing the wheel? If it aligns with your beliefs and makes sense to you and it fits your risk appetite and you can manage risk well around it, and you like it and you see it work in the market, like focus on that one thing and get a good sample size and trade it. And you have to stick with it through market cycles. And so that to me, I found like a lot of people found Qualamagi and Scott One and on Twitter, and Minter Vinny types, and there's a lot of those guys that trade growth stocks. But I got the setup, from StockB and Qualamagi, and it's just inherent market structural movements, like the way stocks move. The first one is just momentum bursts, like the way stocks move in these bursts. And then Qualamagi, a lot of people know, like he trades the ranges. It's just a breakout. It's just the stocks that are consolidating in ranges and they break out. People look at them different. Um, some people trade off the pivots of the highs or within, these basing patterns. Some people trade off the trend lines so you can get a more aggressive entry, but they're just breakouts at the end of the day. And then episodic pivots, which some people refer to as like power earnings gaps, or basically gaps of gap ups based on news and things of that nature. But really understanding the nitty gritty behind each and one of these setups. And so that's what I kind of found working for me in those last parts of 2021 was saying, okay, well, all this other stuff of day trading equities and futures and trying to swing trade equities and futures and jumping around all over the place, and then it's like I narrowed it down. Okay, well, I want to be a swing trader, right? And then narrowing it down even more to that. Well, within that, am I going to swing trade stocks or futures? Well, futures I just didn't really like. I didn't like the way they moved. I didn't like dealing with that instrument. It just didn't really fit me. I love the leverage of it and the, getting around the PDT and things of that nature and tax, stuff, but it didn't make sense to me, to my personality. So I kind of narrowed it down further to, hey, I want to be a swing trader within equities, and I want to be in stocks that go up, and that's growth and anything that's going to make big moves, whether it's story stocks or growth stocks or whatever. And I want to really look at how those stocks move up and the variations they move up, and then I want to exploit that, as a swing trader. And so that's kind of
100%.
where I ended up and where I'm at the end of 2021. So those 3 months, I brought my account from negative 32%, and I finished the year at 31%, beating the S&P. I think the S&P ended at like 28% up or something like that. So narrowly beat it. But I'm really proud that I came out of that drawdown with only really 3 big trades, which
Yeah.
is crazy to me. I did trade a lot. I did make a lot of trades from September to December, and I was day trading kind of intraday momentum stocks too. I was still making those kind of mistakes, um, and I kind of had to realize like, hey, I don't really need to focus on intraday, like these intraday huge movers, and thinking I could use the same patterns within it. And you kind of can. I think there is something there to exploit. But I'm just not trying to spread myself too thin right now. I found, I hit a really good swing trade on Affirm, a really good swing trade on Roblox, and another one on
End
I can't remember
phase.
what the other is. End phase. That's right. Thanks. Yeah, those are 3 big trades for me within that, no, September to November timeframe, and it literally those 3 trades made my year and brought my account all the way back. On top of there were some other small swing trades that I made money on, but I was still losing money, day trading equities, intraday momentum movers in that time frame too. So even with those mistakes, all the other mistakes I made in the whole beginning of the year, 3 really good trades brought me all the way back up. And the only thing I can, attest is risk management. Risk management kept me alive the whole year. I really learned risk management. I understood the math between uh, keeping your winners and your losers in check in relation to each other, and then how that relationship works with your win rate too. And that literally got me through the randomness of me, stumbling blindly through the market, trying these different things. I really understood the importance very early on when I would say early 2021 when I was still taking some big risks. And then I read Minervini's book, Think and Trade Like a Champion, and then it clicked for me. I wouldn't say it fully clicked. I didn't understand the 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 paramount importance of risk management and understanding the math behind it. And I still think I need to do a lot more work to kind of dig even deeper into it. But I understood early on, like, whoa, this is very important. I've seen this across multiple books, multiple traders talk about it. Um, and then Minervini explains it in a really, simplistic way. And then I was able to differentiate that, like, hey, there's underlying math that has to kind of guide your decision making. And so I kind of always kept that tool with me, even when I was from a strategy and setup standpoint, I was completely lost trading, completely different methods and instruments. I understood the risk management and I had a plan for the risk management to keep my, saying it and doing it. I did have a couple big losers, but generally I had a risk management plan and I was sticking to it, and that kept my account from blowing up and it kept me alive. I had a minus 30% drawdown over several months, and I ultimately had to cut myself off for a couple months too, July, August, but it kept me alive. And when I came back and then the market was good and I actually had a little bit more focus, I brought my account all the way back up and ended the year, my first profitable year, trading 2021, 31% gain. Start of the year 5,600, ended $7,343. Doesn't sound like anything crazy, but it's not about the money, it's about the process. And so I'm feeling really good with where I'm at my end of the year. Did my end of the year analysis, and I just found that, hey, like, it was eye opening to see those 3 trades brought me back from the dead, and they were all 3 related to that strategy and that, the realm of like momentum bursts, range breakouts, and EPs. But I'm gonna even, I've been taking it even further to back testing and focusing on each portion of my strategy. The 3 setups. Juan knows, I've been looking at thousands of examples the past 2 months, 3 months, of momentum bursts and just studying that, getting better at it, and putting in the work off the screen and not learning inefficiently through trial and error. And so that's kind of where I'm at. And then ended the year on a strong note. Have way more focus. End of year reviews complete. I found like, hey, stay away from futures. I found that weird pattern where I would, when swing trading would be bad, I would run back to futures and lose a lot of money in futures. Um, and kind of just identified each portion of where I went wrong in 2021 and kind of just boiled it down, threw it out and say, well, I'm not doing that anymore. I'm not doing that anymore. Whoa, look at this. This netted a lot of positive results. I really like this strategy. Now let me pursue that and study it in depth and then only focus on that moving forward to get even better. And honestly, I'm confident in saying, and I know I said this to you on, is that, and I think for, I hate to speak for you too, but I think that we're both getting over that consistency hump right now. I think that we are going to be consistent moving forward, regardless of market conditions, because we've finally figured out that like it's not about chasing these different things. It's about finding what works, narrowing it down, cutting the rest out that's not working, and focusing more and studying more and getting better on what does work, and then only doing that moving forward, and adjusting according to market conditions too, because obviously not every strategy is going to work, ideally throughout the year in different market conditions. So
Yeah, for
yeah,
sure.
sorry
I
that
mean,
was kind of
no, you're good.
long-winded,
You're
but
good. 100%. I think it's very important for us to know where we're coming from. Um,
yeah,
so I think it's very good that you went into depth there.
yeah. So what
Um,
about you?
mine's a lot shorter. I haven't been in the market that long. I opened up, as most, little as most people start off, or as a lot of new traders have started off. I opened up a Robinhood a while back, probably like 2018, 2019. Um, I didn't do much. I did like one penny stock trade, and I think I shut off Robinhood after I lost $80 because I thought that was my whole life savings. Um, and then I didn't get back into the market till this year, early this year, 2021. I believe I actually saw a post by you on Facebook because we are Facebook friends, or we were Facebook friends.
Yes.
And I shot you a message asking you about the market. And you invited me into the Discord, showed me a little bit of TA. This is still kind of when you were doing the whole Elliott wave stuff. I know you showed me a little bit of the Elliott wave stuff early on as well. Um, but you showed me a lot of the trend line stuff too, and I it kind of blew my mind the fact that these charts and these patterns are repeatable on all time frames, and I was like, wow, this is this isn't just gambling. Like, you don't just take trades randomly, and you don't just do this here or do this there, just following investor hype or whatnot. Um, so I kind of started off there. I was working a very, I would say, demanding job at the moment. Not a job I could be very involved in the market on a day-to-day basis because I was um out of my house at 5:30 in the morning. I wouldn't get back till like 6:30 in the afternoon.
Yeah.
So it wasn't. I didn't have a lot of opportunity to study and to be involved in the market. So I was kind of picking up little by little clues here and there. Um, I think I think it was sometime during my day job on I was traveling, and I actually joined a one of those alert services
Yep.
um, for options trading, and I was very intrigued. I'd never heard of options trading before. At this moment, at this point in time, I knew very little about technical analysis. All I knew is that technical analysis did work if done correctly, and if during certain high conviction setups and all that. So I joined this alert service. Some of the admins from there showed me a little bit of this, a little bit of that, and I got very involved with options. I started studying what options were and how they worked and how they moved, because a couple of the trades I followed, I was like, why am I making this much money on one option, or why am I losing this much money on one option? Like, what is
Hmm.
like what why do these things work that way? So I went down a big rabbit hole when it came to options. And I did of a lot of studying when it came to it. Um, I stuck around with the group. For the most part, I stopped following callouts because I realized that following callouts isn't gonna get you anywhere. You got that old adage that says, you you give a man a fish and you feed him for a day, but you teach him how to fish and you feed him for a lifetime.
Right.
And I realized very quick that I'm gonna have to learn how to fish. I can't just because I'm gonna be involved in these call outs, and I can't control what happens. I can't, and it's not even worth it for me to ask like what they saw on the chart because it doesn't matter at that point. I'm already in the call out, so it's not like
Yeah.
so I did a lot of studying at that point. When I started to do my personal studying, um, my wife was actually heading out to the military, so I kind of was transitioning out of my personal job to be more at home during that time, and so I had the opportunity to study. And I did a lot of studying when it came to options, and I think that the reason a lot of new traders get into options is because they're very you know undercapitalized, and options gives you that leverage to be able to make money.
100%.
And so the problem is, options trading. People think it's 0 or 100. You either
Zero
gotta
sum game. Yeah.
yeah, I'm either gonna make all the money or I'm gonna lose all the money, and
Yeah.
I think people don't understand that that's not how that works. I did a lot more studying, a lot more YouTubing and all that, and I came across supply and demand. And supply and demand is something that really stuck with me, because that's just that's the basis of the market, supply and demand.
Hmm.
And at the end of the day, it isn't you or I who's moving the market. It's the funds. It's all the retirement fund and the hedge funds and all that are moving the market with the amount of money that they're moving in and out of the market on every day. So um, I learned how to trade supply and demand zones, and that really stuck with me. The problem was that even though the I saw the amount of success with supply and demand zone, I was still doing a lot of things wrong, and it all came back to risk management. I started my account with about 900 bucks, and I found out really quick that I was a break-even trader. I was picking up some good wins, but whenever I picked up losses, I would hold them too long, and they would bring me right back down to where I started.
And
Uh,
you were still half and half. You were still doing call outs
yeah, at that
and
point,
trading supply and demand,
correct.
right?
Yeah, I was trading supply and demand, and I was still following, trades. And some of, I'm not. There's no bashing on people whose trades I follow. At the end of the day, it was my decision to follow trades. So that's of nobody else's fault but mine. Um, but but I suffered a lot of losses from following trades because other traders are going to be more capitalized than you are if you're following alert services, and they have the ability to go under more than you do. If you're somebody who's starting out with a $500 account, $1,000 account, but the person you're following has a 10,000, 15,000, $100,000 account, they can take a loss on one contract that costs you, 300 bucks. But if you take that loss, that's 30% of your account.
And
And
a lot of these services too, I know like we've discussed about this, a lot of people that just want to follow and they think that they can just make easy money. A lot of these don't, especially newer traders who are drawn to these rooms, they don't even understand risk management or know it's even a thing. People talk about stops, but like you were saying when we discussed like before about these types of services, you don't even know a lot of them don't even advocate or say to even use stops. They just call out positions and they just do call outs and say, "Here, buy this one."
correct.
And
Yep.
that's it, right? So you
Yep.
weren't even were you using stops
So
during this
I
time?
I I was personally, but I wasn't making them as tight as I had to be. And I didn't learn this till, I didn't really pick up on how tight I needed to manage my stops till honestly the past couple weeks even. Um,
You were
because
still managing risk
I
though, because
I was
we had
correct.
discussed that.
I was still managing risk, but I wasn't managing risk in a profitable way for my account.
That's a good way to
Um,
put it.
so that's the only reason I didn't blow up my small account on options.
Yeah.
It's because
Well, other people
I
did.
exactly. You see it all the time, and you see it in these alert. You could jump from alert room to alert room, and you'll see people be like, "Oh, I'm down this much on the year. I'm down this much on the year. I'm down," and I'm like, I mean, how many people are making money? You'll see the profit posting. It's like great. You saw like you just made $300 on that option play, but how much money have you lost? In the background. And so, it was, I came very quickly to realize that I needed to fend for myself. Um,
Yeah.
and I think it was around early October that I really stopped following callouts, and I was like, if I'm gonna grow my account, I'm gonna have to do this on my own. Like I'm not, there's nobody that can make these plays for me and make me a profitable trader but
You had that
myself.
come to Jesus moment.
Yeah, it was a very like, okay, obviously I can't rely on help here.
It's
So
funny if I can just say too, and I feel like we're very similar, and that's why we've worked so well together. Is that we're very we want certain, and I think a lot of people too want certainty in the markets, and you're looking for that control. And a lot of people think, when they're uneducated about the market, they think oh, I can just follow this other trader's call outs. But you don't know what type of strategy he's trading. You don't know his risk tolerance. You don't even know if he's managing risk. You don't know. A lot of times, these rooms, they're salesmen. They live off of the monthly subscriptions.
yep.
And then they just trade. Whether they're, then they always show their wins, but it's very easy to get duped into that sense of, oh, I can just follow somebody. But I think I had the realization early on myself was that that wasn't sustainable, because if I'm following Joe Schmo, what if Joe Schmo gets hit by a bus? How am I going to make my money? And I realized that early in the years too, back in 2016, 2017. But I didn't have the understanding, that you had early on when we kind of found each other, was that, oh, there's a way you can do this through, through technicals and fundamentals or whatever. There's a way to play the game. I didn't even know that there were rules and you could formulate a process, but I think that was important for you, and it's so crazy to hear that you just kind of finally had that understanding a couple months ago, because you were trading so well, I thought, with your technicals and your but you were still kind of doing call outs on the side.
Yeah, I mean, that's 100% correct, and it's every time I would draw up, I made it, for example, I made a recent move, a cross country move, and that took up almost a whole week
Yeah.
of my time. And before I went on the trip, before I made that move, I had a good streak going.
Yeah.
From on my own, on my own,
On your own trades.
my own trades, on my own plays. I had a good streak going, and my account was growing.
Yeah.
And during that week, you kind of get that itch. You're like, like I kind of, I really want to trade. And then, I don't want to say it's not a normal itch, because it is. I mean, if you're this involved in the market and you truly are obsessed with learning it,
Yeah.
somebody who's just who's inexperienced, like I am, You know what I'm saying? Like it's completely normal. And but you have to realize the dangers of like of not seeing what people are seeing in the market and just doing what I did and following callouts. And so
Yeah.
during that week that I was moving, I followed a couple plays and I drew down my account again.
Oh,
And it was like it's super demeaning and
yeah.
demoralizing because you're like,
Yeah.
I work so hard on my own plays to bring my account up, and then to just like draw it back
Throw it
down in a
away.
yeah, in a couple of call outs. You know what I'm saying? It
Yeah.
wasn't even
Yeah.
it wasn't even like just random YOLO plays or like lotto plays that I did. It was literally following somebody else who thought they were gonna make money on these plays. Then they didn't make money on these plays, and I ended up getting the bad the bad half of it, on the
Right.
back end. And so
Well, I mean, I'm sure they did too if they even took the trade,
oh,
right?
for sure, yeah. And
But I
so
understand.
yeah, after I made that move, I settled down and I'm like, okay, that was it. I'm like, I can't do that anymore, right?
Yeah.
And we were
That
still
was that
getting,
lesson.
yeah,
That
that
was
was
that lesson
definitely
for
that
you that you learned.
lesson. And
That's
so
good. I didn't
during
even
that
know about that.
yeah, during that right after that move, I was like, okay, I have the time. I have the time to be able to put in the study time. I want to make this work. It's not about needing to make it work, but it's about wanting to make it work because that's
Yeah,
just
the
what
desire.
this is what I want to do for myself and for my family. And so I've been putting in I put in a lot of study time. I've started doing a lot of trades and I started hitting a nice little win streak. And it's something I spoke with you about, and I'm like, if I'm hitting a win streak, I maybe should size up. And this was that during that October, November, early November when the market was really good. The market was giving us a lot of setups, a lot of follow through in that moment. Um, and I started sizing up, and honestly, I was getting bailed out because at that point, I still didn't have the most excellent of risk management and the most excellent of executions, especially as somebody who's day trading options. Um, you picked. I had already realized that I picked one of the hardest, um, how, for lack of a better word, vehicles in the market because it's something that most people don't understand. And day trading, people already fail at day trading. And the reason I believe people really fail at day trading, if you're just sticking with day trading, especially as a new trader in the market, is because um, people don't like to be wrong. And and then for day trading, you realize you're wrong really fast when you are
You
wrong.
have to.
Yeah,
if you if you
exactly.
don't hold on.
And people hold on to the hope that they're not, right? So it just keeps
Yep.
going against and against them.
Yep.
And it's like by the time you're out of the trade, it
You're
probably already went too far against you. And you drew
oh, it
down
for certain did, yeah.
yeah, you drew down really hard, right?
In one trade.
And so I honestly believe I think that's the main reason people fail at day trading if that's the vehicle you're choosing on the market. And so um I November was a very bad month. I did have my biggest win, but because I sized up on that win, and I after I hit that big win, I started taking losses and a lot of them. And then I was almost at one point revenge trading, and then I would trade. I traded Tesla during the end of the week on like those end of the week contracts, and I got killed by Theta, and it was a mess. Then November was honestly a mess for me and my account. I think I drew my $900 account. Um, it was from like I think 1,000, like almost 1,100. From 1,100, I drew it to like 450 or 460.
Wow.
Um,
What would you say other than um than the call outs. At that point, was that still a part of that issue, or what was the issue of that string of losers?
No, the issue with that string of losers is that I had gotten bailed out a couple of times by keeping my stop loss too wide. Um,
Yeah,
and whenever my position would go against me, I would hold on to that same hope, right? And
yeah,
hope is a killer in the market. You can't that
yeah.
if you're hoping, you're already in too deep.
And you
You're
weren't as
too far gone.
mechanical with your
I
stops,
wasn't.
correct?
No, I wasn't mechanical. So, I think we had a lot of discussions going into December about, the vehicle that I was trading and how I could manage my stops. I started doing a technical deep dive as well, the same type that you did with your setups. I started looking at execution possibilities. You were a huge help there too because it's like, okay, let's go back through candle by candle. Let's see if there was a better, better places to enter this position and all that, right? And I started seeing the clues.
Right.
Um, and so I really took to a setup, a key level break setup. I call it key level breaks just because I go into the daily chart and I will chart what I call key level resistance areas, just horizontal resistance areas, places of big interest for certain stocks. That if they break and I see the intraday volume going into that level, I will take a position almost in anticipation of that break.
Hmm.
Um, and so I took to the setup very well, and I said, okay, I started my journal at that point, my online journal tracking my trades, and I realized that these setups were the most profitable for me. And so I focused on that, and I started going through, and I was like, okay, what are the clues here? Like, how am I trading these the best? And I was seeing, my volume expansion candles. I was seeing the price action in the candles. I saw what times of the day, these typically happened, and I
Yeah.
honestly focused on them. And even then, I did not start off December very high. I think I started off December with 3 or 4 losses. Keep in mind, I'm still day trading, or I will be. I'm that is my sole focus. Is day trading these,
Yeah.
just because I like being cash overnight. That's
Right.
it's just how it's my personal. I think
Like we were
it's
talking about
yeah.
the beliefs.
It's my
Yeah,
it's my
it's your
personal yep,
personality.
my personal beliefs, and that and there's nothing wrong with that. I think a lot of people need to understand that, like, depending on your personality, your setups and the way you trade is going to drastically change. Like, and
Over
that there's
time.
there's
Yeah.
yeah, and there's absolutely nothing wrong with that. Everybody, is profitable in their everybody who is profitable in their own way.
Hmm.
And as long as you can manage risk and you're sticking to your rules, then there's nothing wrong with the way you trade versus the next profitable guy.
Yeah, not
Um,
right or wrong.
yep,
Yeah.
there's definitely no right or wrong on the market. And so
You're
I
wrong if you don't manage risk, though.
correct, yeah.
Like we've talked about, but
And so I got super diligent. The first week of December, I printed out a confirmation trading rule sheet. I started charting every night. I was going through a lot of social media ideas because I can't see the entire market, so a lot of the times I will see charts on social media that I'm like, oh, that looks pretty good, so I'll add it to my watch list. And I always plan my trades beforehand. If I don't have it written down on my sheet the night before, I will not trade it.
yeah.
Um,
And that was a rule you recently implemented
and
too. I
that
know we
was yep,
discussed about.
that was a rule I implemented that first week of December, and I've stuck to that rule ever since. And honestly, December has been the best month so far. I have still been working on execution. I think that can get a little bit better still, but I have been keeping my stops very tight. I'm uh, getting my entries in what you and I have spoken about called the danger zone. Where, like, I know almost instantly if I'm wrong, and I have no regrets getting out of a trade if I'm wrong immediately, because
Can you go into that a little bit too?
yeah, so um, a lot of the times we'll look for I'll chart my key levels and I'll chart usually I'll use the wicks of the, like daily candles or weekly candles to chart these levels. A lot of times on the intraday charts we'll see where a lot of candles will get very tight, and volume will fade very hard, and the price won't move down. It'll either
Hmm.
consolidate or even move up into that level. Um, I know when those candles come up, that is the danger zone. That is, it's either gonna go or it's gonna fail at that point.
At that area,
Yeah,
yeah.
exactly. So
Gotcha.
that's where I will typically position myself in anticipation of the potential move.
Yeah.
Um, Sometime,
Before
yes,
the breakout of the
before
level.
before the
Gotcha.
breakout. That was one of the
Yeah.
problems I had before is I would wait till price broke the level, then take a position, and at that point that's chasing, right? Because I don't want to, the people who were in before that level break are selling me their contracts at that point,
Hmm.
and so I I got really focused on how I was gonna manage how I was gonna manage those key level breaks, and we came up with with some ideas. I know you helped me out a lot, and then I started going through charts and trades I had already taken to really manage that.
Yeah.
And honestly, even with a market that has had absolutely, very little follow through, the my execution has gotten 10 times better, and I brought my account. I think I over doubled my account from those lows,
Yeah.
and I ended positive on my first calendar year of trading by
Right.
like it was only like 3% I think on the year, but
Hmm.
uh
Positive note.
but I did end on a positive note, and it's very reaffirming to me because um I did it in such a short time by following set rules,
Right.
that I know that if I continue to follow my rules and I continue to focus on my setup,
Hmm.
because I'm not just trading bounce here, trend line bounce here. I'm trading my one specific setup that I was able to bring up a small account from. Um,
Yeah.
and so I think it's very important and very reaffirming that that has worked for me, and I think I will continue to, I'm going to continue to expand on that.
Right. I think too, you were able to realize very early when, like we were discussing when you first started out and you reached out and we, started getting into markets together. You saw the importance because it was funny when you came in around that time. I was really, still kind of lost within how I was trading, but I think, you know, you really latched on and grasped the understanding of risk management very early on. And it's funny that even though you went through the mistake that a lot of people make of following trades, which I did earlier in my years, following tips, and people want easy trades, and being, I guess, you know googly eyed over big P&L, winning trades of people with large accounts. Even though you went through that sort of beginner stage level mistake of following callouts, because you were managing risk, it allowed you to just kind of evolve in a very short amount of time. And we've had our little pressure cooker discussions, and this Discord of you and me that we're just in journaling together. We're here every day talking and trading, and it's kind of crazy to see realistically how far you've come in such a short amount of time, and your understanding of the market and the foundational aspects of strategy and things like that. um, but to hear it's kind of like you did the same thing in such a short amount of time. um, I think that speaks volumes to the importance that risk management is just it's a foundational edge. Like, boil it, like we talked about earlier, like building that foundation up, that understanding and you implementing that like allowed you to survive through even following other people's trades, but they weren't managing risk. I know, like you told me, they weren't telling you, "Hey, place your stop here." I think they were telling you not to use stops, right? In the in the
Y-
call out
Yeah,
service.
so like you said, the whole risk management thing, like if you're managing risk in the market, you're already so far ahead. And that's just gonna keep you alive till you
Or at
can.
least death by a thousand cuts till
Yeah,
you can find something. Yeah.
exactly. Gives you that extra leeway there. But yeah, a lot of these alert services, that's the problem. They'll let these contracts go to zero, or you'll ask them, and you'll be like, "Hey, are we still holding this contract?" And they'll be like, "Oh no, I got rid of that contract a couple weeks ago." And you'll be like, okay, well, like, why didn't you know? And then you'll think to it's like, why didn't you alert this? Do you only alert the sales for like the positive sales? You know what I'm saying? Like, if you're selling at a profit, like that
Right.
doesn't make any sense because like, are you like, it's almost like false advertising, right? At that
Oh,
point,
100%. Yeah.
because it's like no, if you're selling at a loss, like you have to be alerting that too, because there's people who are in your play. And I think overall that's just like I said, false advertising.
It's its
And
own business. It's its own business. They're there for the monthly, I mean, and not every alert service is like that, because there are, good traders that, alert their trades and stuff like that, but it comes down to, hey, I think you have to have that understanding, is that if you think you're going to make it big in this business, you can't do it following someone else. I mean, in terms of a mentoring, if I brought someone in and I trade someone, if I was, hypothetically, if I was a successful trader or whatever years down the road, if you bring someone in and you take that one person or small group and you train them, and you're actually really training them to do it, that's one thing. But a lot of these educational services, a lot of these alert services, you have to understand they're just advertising to get your subscription money, to get your money.
yep,
And some of them are legit. Some of them actually teach real tactics. But like when I took my course, I paid $5,000 for that course, and even though I do think there was genuine, there were good, um, I don't know,
like nuggets of
intentions.
information.
Well, yeah, there was some basic, but it wasn't anything I didn't find in books that I read.
Yeah,
I mean, it was compiled. But even though that trader was successful, it's not guaranteed that you're going to be able to replicate that efficiently,
correct.
especially as a new trader. And you think that you're just paying, oh, that was a lot of money, man, to lay down for a course. And I thought I was just going to get rolling and I had the secret sauce. And a lot of people, even if you get to that point, but a lot of people don't even get that. They just do the alert service and they think like, oh, I'm just going to, and you're just, it's not sustainable. You have no idea what you're doing, and the person who's probably giving you the alerts probably has no idea what they're doing. You're probably in a bull market, and you're getting lucky if everybody's making money, because everybody makes money in a bull market. But when the market gets choppy, or we enter a bear market or a long duration corrective period, that's where that's where that gets pretty tough in those rooms. So
Yeah, and I mean, and we saw that just in December itself, right? In like that mid-November to like mid-December period, where the market was just in that, like, it would drop for a couple days and it'd go back up, and then it's like, oh yeah, like we're back to the bull market, and then the next day it would sink again, and people.
right, and everything's getting sold off
And then
under the
people
hood.
people were getting pissed. People, especially in these rooms, you see people getting upset. It's like, oh, this market's so manipulated and so this and that. And it's like, no, like, under the hood, stuff was getting sold off even before the correction, like before the index correction was
Right.
happening, right? So, um, it's like you have to be aware of what's going on under the hood. Otherwise you're gonna get chopped up. And this is, and it's like, um, you get asked, why haven't you taken any trades, this or that, and then it's like, look, I saw this coming from a mile away, right? You and I had spoken about this because I'm still in the room, I'm still in the alert service. I just, you know what, I don't pay for it anymore because I'm actually part of a part of the admin team now too. I just don't make any call outs myself,
Right.
because of the same reasons. I don't like following the call outs, right? I don't
Right.
want people to follow me in, and then for me to make a call out, I'm I don't want to risk. I don't want to subject myself subconsciously to people following me in with real money and potentially large amounts of real money,
Right.
and me being
Yeah.
responsible for that, right?
Right.
Um,
It's a distraction. It was
it
a
is. It
distraction
is.
for you. I
It
know.
was a huge distraction for me. And so I stopped. I stopped altogether, and I help. I like to think of myself as just somebody who helps out the new traders in there. If they have questions
Yeah.
about technical analysis or they have questions about a stock, and then they'll ask about stuff like, Peloton or DKNG, who have been in steady downtrends for the last half year, and it's like, why are you even looking at that? Like they keep hitting new 52-week lows, and you're like stop looking at these type of stocks. Like look at the ones that are strong in the market. Stop looking at the ones that are weak. Like
Yeah.
you're not gonna catch a bounce. Like just because Peloton went from 150 to $50 doesn't mean it's gonna go back up to 150. Nobody guarantees you that Peloton's gonna go back up to $150. You know what I'm
Yeah.
saying? So
A lot of people don't understand that. I mean, even if they're in an alert service to begin with, they're not even, a lot of them can't comprehend the level of knowledge that other traders, kind of where we're at, and even traders that are above us on Finchwit and things like that. When, I understand when they say certain things, certain little nuggets of knowledge, and I can contest to a lot of stuff in these books I read. When I read through these books for the first time, I was like, oh, that sounds good or that makes sense and da da da. But like, you really don't grasp it until you go through the lessons, like actually through the market and making those mistakes. And if you're very astute and you can kind of internalize that, it's like, hey, don't touch this stove because it's hot. It's like, oh, okay, well, yeah, that makes sense, right? And then you're just, especially in the market, if you go to touch the stove and do it, it's like, well, until you get burned, either badly or several times, it's like you may not get that, and then it becomes, oh my god, like this makes complete sense, I get it. And you don't have to burn yourself, right? And managing risk too can kind of make that burn less if you make that mistake, and the quicker you can realize that and fix it, the the better you're going to get. But I think what the main thing for you is that you have realized your mistakes earlier and course corrected a lot faster, and I think that's why you've come so far, from being following these these alert trades, and then your life changes too, where you've been able to focus more on education and trading, and you found your niche, and you're kind of studying that now and seeing that it's paying you. And
yeah.
so I think for 2022, have you thought about the goals you want to set for yourself for this year
Um,
coming up?
yeah. I mean, I think my first one's is definitely execution. Just 'cause I'm day trading. I'm day trading options contracts.
Right.
I've like I said, I've already chosen one of the one of, if not the hardest vehicle to start off for a newer trader. But I've taken such a liking to it that I really think I can progress if I keep putting in the work
Yeah.
within the market with what I've chosen.
Yeah.
And so I've seen how important my execution is when it comes to my wins in the market. So I definitely think my execution is one of my top priorities because I already know that I'm very is risk
Verse.
adverse? Yeah, risk adverse, the right word there. So I know that for me it won't be a problem to just when I see that I'm wrong on the chart to call it quits and to be like, okay, I'm wrong. There's nothing wrong with that.
Yeah. And to
Um,
clarify, you're doing that mathematically, though. It's not just
Correct.
based purely on
Yes.
a technical level.
It's not always based purely because the way the options contracts move, you can't always base it purely on technicals unless you already have that upper hand when it comes to the profits. Um, in terms of like that specific trade. A lot of the times I will literally be out just as fast as I've gotten into the trade because I can keep my I can keep my stop losses for these contracts under 10 or 15%, where my profits are sitting at right now, 30 to 40% very
Yeah.
quickly.
Yeah.
So I can keep that profit factor in that, within a 2 to 1 at the minimum.
Right.
Um, so yes, it is purely based on mathematical right now. And also I've seen personally the last couple, weeks that we haven't had a lot of follow through. I'm hoping, the market picks up on the follow through and I can start uh giving these contracts more in terms of the profit. That way I can, I can tighten up risk more and, see more success in 2022.
Yeah. Yeah. So focused on execution and just dialing in your risk management more, huh?
Yep.
Well, that's good. Well, it's about well over an hour, I think.
Yeah, it's a little bit over an hour.
Yeah.
I definitely think it's gonna be pretty exciting to see where we're at here the next couple months, halfway through the year, even end of the year.
And we're gonna shoot for one of these once a week, right? On Sundays, we're gonna
Yes, we'll try.
record and then
Yep, we'll try and
up.
shoot. Just give updates on how we're viewing the market, any trades we've potentially taken, or looking at taking, how the market's looking. I'm sure that's literally gonna change every week. Um, and
I think too,
just
mainly lessons. Yeah, lessons,
yep,
documentation, and real time organically is. We're not looking for external, help or this is more so. I think when we discussed why we wanted to do this and start this was to one leverage it for ourselves to keep the progress in perspective week to week and to be able to go back and look and also just for people from the outside to be able to look in at like two individuals who are very driven to figure this business out, um, and then just organically us flowing, bouncing things off each other, having this was an introduction one, but next weekend I think we'll probably pick a topic and kind of just go in depth and kind of just do a just kind of like a roundtable discussion between the two of us like we normally do in Discord when we talk things out, when we're
yep,
trying to figure it out together, and just to kind of record those discussions and put them on the on the internet for other people to benefit from or critique or whatever you want to do with it. But at the end of the day, it's just for us to document it and an interesting way to leverage, to try and gain an edge within ourselves, a different media, a media version of other than like, you and I maintain a physical pen journal on our desks, and we have an online trading journals that we use to track our own trades and journal on there trade by trade and look at our performance metrics. But I mean, I think this is pretty cool having a discussion organically and just to watch two individuals find their way through this game and figure it out, over the months and weeks and years that are to come. So we'll see what happens. We're definitely, I know we're both committed and we have the means to focus on the market, and
yep.
I'm really looking forward to doing these every week. I think it'll be nice to hold each other accountable and to discuss everything from mistakes to law. I mean, me. I still make dumb mistakes every day. I have to fight the same demons that everyone else does in the market of, when you deviate from, even if you're a trader where you've gotten to the point where you have a system and rules, it doesn't mean that there's discretionary issues and execution issues where you deviate from that plan. I know you know that one too. You're better at that than me, I feel like, because the way your strategy is, it's very hard for you to deviate from a setup. Whereas my setups are a little bit more subjective and I can get into some trouble. But
Yeah, I
um,
definitely I have to be more focused because if I'm not I have more opportunity to blow up faster than you do for sure. So I definitely can't risk deviating from my setup.
yeah, and I
Um
think you've done well with implementing your guardrails too and your rules to you're very disciplined in a sense where you take your trades, and like you've more recently too have come across rules and stuff to keep you out of trouble and make it clear, like, hey, I'm gonna take this trade or I'm not, based on what I see.
Yep.
And that's super important. But we'll have those kind of discussions week to week, and we'll pick a topic, I think, and we'll just do a
Uh,
roundtable like we did.
yeah, 100%.
So I guess I'll see you tomorrow on Monday, and then we'll pick a topic too, and we'll do our next one on this coming Sunday.
Yeah, that sounds good to me. Yeah, I think we can definitely call it there.
Yeah, awesome, man. Well, great.
Yep.
Well, thanks everybody for listening. Relentless Traders Chat, and then we're out of here. I'm Surreal_trades.
Yeah, Wangar 97.
I'll see you guys in the next one. Thanks.